Will we know where the redemption centers will be? That question has been circulating for weeks now in forums, social media groups, and private chats amongst those closely watching the financial landscape. MarkZ has addressed it several times, emphasizing patience. According to him, we will know where the redeeming banks or redemption centers are when the time is right. There is no set date or official announcement yet, but the signs are starting to appear. People are naturally eager to have clarity. After all, knowing the specific locations of redemption centers is critical for planning, especially if you intend to handle large amounts or need to ensure a smooth transaction. The anticipation has been mounting, and with each new message or update from banks, the speculation only intensifies. Commenters often share their experiences, and recently, one person mentioned receiving a message from their bank indicating that, starting March 4th, the bank will have a whole new look. The significance of this change is not just cosmetic, it likely indicates operational changes that could be linked to the wider redemption process. Many followers of MarkZ have noted that such transformations in banks often precede or coincide with shifts in redemption procedures. The timing seems interesting, especially considering MarkZ's observation that he is hearing about lots of banks expecting massive changes between March 2nd and 4th. It aligns with the message one bank customer received, adding a layer of credibility to these reports. The chatter in forums indicates a mixture of excitement and apprehension. People are discussing which banks are likely to be ready first, which ones will handle redemption efficiently, and how this will impact the general flow of currency exchange. While official confirmation is not yet available, the convergence of multiple signals, such as MarkZ's insights, bank announcements, and internal communications, suggests that something significant is on the horizon. The timeline between March 2nd and 4th is becoming a focal point for many enthusiasts and investors. They are monitoring closely, comparing notes, and trying to piece together the bigger picture. It's also interesting to observe the behavioral patterns around these discussions. The uncertainty creates a heightened sense of anticipation. People tend to speculate, share tips, and sometimes misinterpret signals. For instance, a bank's announcement about a whole new look can be interpreted in various ways. It could be about physical renovations, updated online platforms, new security measures, or preparations for redemption processing. The ambiguity fuels conversations and creates an environment where every small piece of news is scrutinized and analyzed for potential implications. MarkZ's approach is calm, yet informative. By saying, "We will know where the redeeming bank's redemption centers are when it's time," he emphasizes patience and readiness. He avoids giving definitive dates or locations, understanding the sensitivity of financial operations and the potential for misinformation. This approach, while frustrating to some, helps manage expectations and keeps people grounded in reality. Following MarkZ, many are learning to read between the lines, looking for hints in bank communications, monitoring official channels, and paying attention to subtle changes that could signal broader operational shifts. The March timeline is particularly intriguing. If banks are indeed planning massive changes between March 2nd and 4th, it could indicate that redemption readiness is nearing its operational phase. Observers have noted that such transformations often precede significant events in the financial system, whether it's the introduction of new procedures, updates in currency handling, or preparation for redemption activities. The consistency of the reported dates across multiple banks strengthens the credibility of these speculations. While no official list of redemption centers has been shared, the trend of banks preparing and communicating changes is a tangible sign of movement. People's comments further illustrate the excitement and curiosity. Receiving a message from a bank about a new look might seem mundane to the average customer, but for those closely following MarkZ's updates, it becomes a piece of a larger puzzle. Enthusiasts share screenshots, discuss possible interpretations, and speculate on which branches might be designated as redemption centers. The community aspect of this phenomenon is fascinating, as it allows collective analysis and insight that would be hard to gather individually. In these discussions, small details matter, and even a seemingly minor announcement can trigger significant debate. At the same time, there is caution. Not every update is accurate, and misinformation can spread quickly. This is why voices like MarkZ are crucial. They provide a tempered, informed perspective amidst speculation. He acknowledges the patterns he observes without overpromising or creating false hope. His statement about banks expecting massive changes between March 2nd and 4th is based on multiple sources and patterns rather than a single unverified tip. Followers have learned to balance excitement with skepticism, understanding that patience and careful observation are key. The role of banks in this process is central. They are not just financial institutions, they become operational hubs that will handle redemption, coordinate with regulatory bodies, and ensure compliance with all protocols. Any announcement about a bank revamping its services or infrastructure can signal readiness. Banks' communications to their customers, like the message about a whole new look starting March 4th, are subtle yet meaningful. These updates often hint at upgrades in systems, changes in branch operations, or new procedures that align with broader financial events. Looking ahead, many are keeping their calendars marked around early March. The potential alignment of multiple banks undergoing changes simultaneously could indicate a coordinated effort to streamline redemption processes. Observers are not only interested in locations but also in logistics. Which banks will have the capacity to handle large volumes, what security measures will be implemented, and how the process will be structured. The anticipation is coupled with preparation, as people want to be ready for when official announcements are made. This period is shaping up to be a critical window in the unfolding scenario. In addition to logistical preparation, there is also the emotional aspect. People are hopeful, curious, and sometimes anxious. The uncertainty naturally brings a mix of feelings. Communities discussing these updates provide support, share strategies, and sometimes even advice on approaching redemption efficiently. The blend of anticipation and preparation reflects a larger pattern seen whenever major financial operations are expected. The narrative isn't just about locations and dates. It's about understanding patterns, reading signals, and preparing mentally and practically for the coming changes. The repeated emphasis on timing is essential. MarkZ's guidance encourages followers to wait for concrete information before taking action. In financial matters, premature action can lead to mistakes or missed opportunities. By highlighting that we will know when it's time, he reinforces the importance of patience. This advice resonates strongly with those who have seen previous cycles of speculation and excitement. It also subtly directs attention away from rumors and toward verifiable signals, creating a more informed and engaged community. The mention of massive changes between March 2nd and 4th adds another layer of anticipation. Changes at this scale suggest more than cosmetic updates. They could involve operational restructuring, upgraded systems, and possibly the introduction of new services or processes that support redemption. Observers are paying close attention to any announcements, changes in bank procedures, or public-facing communications. Each small update is dissected and discussed for potential implications. The coordinated timing across multiple banks, if confirmed, could provide a reliable framework for predicting when and where redemption processes will be implemented. It's worth noting that communication from banks is often deliberate and staged. Banks may release teasers or subtle hints before making official announcements. Customers receiving messages about updates, renovations, or new features are often part of a broader strategy to prepare them for upcoming changes. These communications serve multiple purposes. They inform, reassure, and sometimes prepare the system for increased activity. For those following MarkZ's insights, these messages become valuable signals in decoding the timing and readiness of financial operations related to redemption. The broader context cannot be ignored. Currency changes, redemption processes, and operational updates are interconnected with the overall financial ecosystem. Banks are central players in this network, and their readiness is critical to smooth execution. Observers are not just looking at individual banks, but also considering systemic patterns. When multiple banks signal readiness or undergo changes within the same time frame, it can indicate coordinated efforts at a higher level. This reinforces the importance of patience, careful observation, and reliance on informed sources like MarkZ. The ongoing conversation highlights a blend of excitement, strategy, and anticipation. Individuals are monitoring banks' messages, observing patterns, and discussing possible implications. Each small piece of information, whether it's a date, a new system, or a structural change, is carefully analyzed. The community aspect of this process allows collective insight, which is especially valuable in situations where official information is limited,